wicks above or below, right? Ranges, by the way, are very important because this is where the BFIs are cooking. This is where they're exchanging their orders and agreeing to potentially move the market, right? So this is where they decide where they want to go next, all right? So I want you to go on your charts right now and go and spot like a very big move somewhere. And I promise you, before this big move, there is going to be like a period of a consolidation, right? And there is going to be usually a liquidity grab. So usually what happens is the market goes from a downtrend and then starts to range a little bit. It ranges, like starts getting a little bit sloppy. And then you have this. Okay, so what happens right there is the market is accumulating orders, is building up orders. Then there is usually going to be a liquidity grab, which I'm going to teach you in the supply and demand video coming up next. And then the market just massively expands. Okay, so pretty much trading within this consolidation is very risky. If you have a consolidation on the 4-hourly time frame or on the daily time frame, this can be a trend on the hourly or on the 15-minute, but do not trade lower time frame consolidations. Why? Because of this. Because above every consolidation, there are people that are looking to go long and there are stop losses of sellers. So right there, we have this beautiful resistance level, right? What is above this resistance level? We have people that are looking to take the breakout with a buy stop, and we have people that are already short from here and have their stop loss above. Okay, what do we have at the downside? Support level. What is below? If we break below, a lot of people are going to be looking to take a breakout, which means they have a sell stop order, and all the people that are long from here, they have their stop loss. Okay, so I'm going to show you an example right now why this is the case. Here it is, right? So again, I want you to go ahead right now and pause this video and mark the structure again. Did you do this? Pause the video. I know you're not pausing the video. All right, so hopefully you did, right? So here you see that when you open this chart and let's imagine that this price action does not exist right there. When you open this chart, what is the first thing that comes to mind? Okay, it's ranging. Yes, but there is still structure in between. However, it's not clean, okay? But it's still, as I said, it's tradable. So this is pretty much a daily consolidation right there. So you can see the 4-hourly market tends to change up and down, wicks down, goes up. Yes, this is a higher low formation right there, but then the market chops again, pushes up, higher high, higher low, good, then higher high. So we had like a little micro trend right there. Then it shifts down, then it shifts back up again. You can see it's overall like an uptrend. And if you again read market structure properly, you are going to be entering into those trades. Okay, and then the market throws this little big push. So again, what I tell you guys, before a big move, you have a consolidation. You have a nice buy to trick, because what is above this consolidation, there are stop losses of people that are short and there are buy stops of people that want to go long. Okay, so what pretty much happens is this. You have stop losses and buy stops above. You have stop losses and sell stops below, right? You can see how many times. So here we had a wick, the market wick below the wick. Here we have a wick, the market wick below the wick. So what is this doing? It's triggering sellers into the market and it's stopping out the buyers, right? Here are the orders to be taken, and then the market is going to create a trend. So this is why patience is key. These consolidations, you don't want to trade. So this is a very big consolidation, and then we have small consolidations in between. This is absolutely unclean. So again, if you see price action like this, that is wicky, that is not clean, skip it. Okay. So before we jump on to some examples and more advanced market structure, I want to share some details, right? Mark your structural points with the highlighter too. I'm going to go on the charts right now and show you. Detail is that wicks are breaks for me, but what you can do is you can do also body breaks. To me, body breaks do not work, right? Because then sometimes you had a wick break, the market just massively continues while you're still waiting for your body break. Okay. Again, according to me, if you have a downtrend and this is your lower high, okay, and if the market comes in and just wicks above it, this to me is a break. So what I'm going to be doing is then this is my low. I'm going to be looking for a long setup, because if this level was so strong, it shouldn't have broken. How do you know if this is going to be a liquidity grab? If the market goes on and breaks the low, and then you can say, okay, well, it shifted structure up, but it was technically a liquidity grab. So what I'm going to do right now is I'm just going to continue following the flow down. Okay, so this is for you to decide. Are you going to do bodies or are you going to do wicks? To me, wicks work great. Okay. Also, a little detail, be aware that the trend is fully established after two highs or lows are created. Let me give you an example, okay? What tends to happen sometimes is you have an uptrend, Okay, so what is the market supposed to do in this case is maintain this low and break this high. But what happens sometimes is you have this one break. Okay, so is this an established downtrend? No, this is just showing us a trend change, which I'm going to teach you a little bit later in the formations. This is a trend change, but what tends to happen sometimes, as I showed you just in the previous example with a liquidity gap, sometimes this happens. Okay, so when is a trend established is when you have this, which is a trend change, then the market pulls back, does not break above this high, which is right now our major high, and then breaks the low. So what you have right now is one lower low, two lower lows, right? So two lows are created in this example. And right now you can say, okay, we've made the trend change and we have confirmed the trend change by a break of structure. But I'm going to tell you, I am usually very aggressive with these setups as well. When I have a trend change, this is what people call CHOCH, change of character. This is when the character of the market changes from bullish to bearish. And this is when you can potentially expect that a reversal is incoming. Okay, but again, a trend is not established before you have two of those highs and lows. Okay, as I told you in the examples, always mark your structure breaks and always trail back price to see where your lower high, higher low is. And again, mark it with a bold line. Learn to zoom in on your charts and spot all the details. Don't be zooming out like looking at the market from a macro perspective. You're not like positional traders. Zoom in and look at all the details. Major and swing structure is your main trend guidance. Do not confuse it with minor and substructure. We're going to look at minor and substructure, and in the last lesson, I'm going to teach you timeframes. Okay, so minor structure forms within the major one, and we're going to explore that a little bit later. Always take note of consolidations and ranges, right? Do not trade them on a lower time frame than the 1 hourly time frame. It's just not worth it. If the market is consolidating on the 4 hourly, you're going to have trends. You're going to have 15 minute, you're going to have 1 hourly price action. But if the market is consolidating on the hourly or on the 15 minute, do not trade. Okay? Practice, practice, practice makes perfect. Understanding structure is your first goal right now as a trader. And then of course, everything else will build up on top of it. Okay? And of course, a gap of your understanding in structure will really hinder you from understanding the advanced concepts later, right? What I see a lot of people do is they jump on the flashy smart money concepts without actually understanding structure, right? To start drawing supply and demand, to start doing like SMC traps, to start doing order blocks, to start doing all of those stuff. But within the foundation of that stuff, if you really carefully look at it, right, it's market structure. An order block forms when you have an uptrend and the market makes a break of structure. This is your higher low formation that is not supposed to break, right? And this is where you draw your order block. And why does this hold is because the structure is bullish and this is the higher low that should be maintained. Okay, so it's not like rocket science, it's just market structure. I identify my trend on the 4 hourly time frame. This is my major time frame. This is my trend time frame. Okay, the 50 minute is my minor time frame, which we're going to cover later. Okay, so here, this is where we mark market structure. Okay, so I just want to show you the process. So it's not only like examples on the PowerPoint. Let's just go back a little bit, like stop somewhere randomly, maybe have a look. Well, let's have a look here. I also want to pick a little bit of a complex price action so that you actually learn something and to see how the market is not very perfect. Okay, so here, let's start from right there. Okay. So there we had a break of structure. How I mark my break of structure is again, I have like you can see here, I have a 4 hourly breakdown up, 4 hourly breakdown, 15 minute up, 15 minute down, 15 minute trend change, 5, 1, trend change, liquidity grabs, right? So you can copy this, right? So when I do this, 4 hourly breakup, okay? So then after this higher high is formed, once again, how do you know that a higher high is formed? Well, when you have like at least one pullback candle away. Okay, so this, as if it keeps pushing, then it keeps pushing, but when it stops, you pretty much see it, you cannot miss it. Okay, so then the important point to ask is, okay, what caused this break of structure up? Okay, so from the high, you track it back and you see that it was actually this guy. So what a lot of you will do is they're gonna say, well, it's this one because this is the lowest point before the break, and this is what I did in the past. But right now I have very specific rules that are very refined, and they tell me that this is my 4 hourly break, right? So we went, so what I'm gonna do, so we had a highlighter too, we were bullish, higher low was created. So if you just track it back down, this is not valid. Yeah, okay, so the valid one here was this guy. Okay, so this is the higher low, this is the higher high, so we were not supposed to break below this guy. We just gave a little pullback, went on and took out the high which was supposed to be broken. Okay, so just that we build a story. Here, as I tell you, again, I take wicks as breaks, because if this level was so strong, it shouldn't have wicked. Okay, so what happens right now is we have a trend change on the 4H, and remember, a trend is not established yet. But what I immediately do, okay, this is my high that was bullish, but right now it's kind of turning bearish, and right now we have a lower low. This lower low, what caused it? We track it back, and pretty much it's this guy. There is nothing else. So this is our strong high right now. This one should hold. Okay, the market pulls back, potentially forms a lower high, and again, I told you the market is not perfect, but what are we supposed to do is we should be going and taking out the low. The market consolidated right there for 5 days before actually went on and broke it. So what do we have right now is a new lower low. So how do we know that the lower low forms? Well, here you have a bullish candle, bearish candle, bullish, bullish. There it is. It's formed, right? Then you track it back, right? You track it back. There is the last pullback before the break. Okay, it's not this, it's not this, it's this. So this is not supposed to break. But again, as I told you, the market moves in cycles. We had like a little kind of A, B, C to the downside. And what the market does, it breaks structure up, right? So what we have right now is a trend change to the upside. The market pushes, it starts pulling back. Perfect. What caused this break? Okay, in this case, it's not this, and pretty much, yeah, okay, so in this case, according to me, in this case, it's gonna be this guy. Okay, so this is our strong low right now. So what we have, let me not forget, so yeah, this was a low, but right now we made the high, right? So what we're looking for right now is for our hard low. And what I'm gonna teach you later is the 50%, right? Which is usually where the market comes in before making a new high. And here you can see the market makes all of this stuff. So this is minor structural right now. And what it eventually did is it came in and took out the high. Okay, what is the structure? What is the low that took out the high? We track it back.